we spoke a little bit before earlier today, and everybody was very pleased as punch in terms of the performance of the market at the open. You talk about a turnaround.
Today was always going to be a bit of a test. Start of a new quarter, we don't have the activity flowing through from the window dressing that we saw last week, and our market ends up down 0.1%, despite some very positive PMI numbers coming through from China on Sunday, which helped to boost the Aussie dollar as well as the Australian market this morning. So having a look at the intraday graph, and this is what it looks like. I guess the interesting part of today's market is that the gains were led by the materials and the energy space, and we saw the materials and the energy space really holding on to the gains, and in particular BHP Billiton was a stock on the radar today, and it performed very well. If we have a look at BHP, and if I just bring up a chart of BHP, and this is a one-year chart, you can see this $34 level is a very important one. Over the last 8 months, we've seen BHP bouncing off this support level 8 times, and we've recently seen an important short-term technical formation where, if I just zoom in a little bit to this BHP share price chart, and if I just zoom in so you can see from the start of the year, what you'll notice here is we have the support level here. BHP shares have been falling, but just recently we've broken through that triangle on the upside. So as long as we don't see a significant pullback in BHP Billiton shares, and we remain above that top line, which remains at about $34.40 at the moment, then the target there is $38. So a lot of technical analysts quite excited about that move in terms of BHP, and most of the action was in that material space. One other thing worth mentioning are the building approval numbers for February. We saw a decline of 7.8% there, and we did see stocks like Fletcher Building down by 2.2% and Boral down by about 2%. But altogether, not a good day for the Aussie market. Outside of materials and energy, we mostly saw losses for the other sectors.
I wonder how things can change so quickly coming off the back of speaking last week, and we were talking about breaching technical levels, and then particularly a ride up to 4,600 to 4,800. Now looking at the bottom end of a range, potentially testing 4,000.
The market never moves in a straight line, and while we saw an extremely positive week last week, I guess it was time for a bit of a pullback on the Aussie market. I think the catalyst for the Aussie market over the next few days are going to be the manufacturing numbers coming out from all over the globe, as well as the interest rate announcement that we're expecting tomorrow. So we have seen some positive numbers already flowing through. The China official PMI numbers coming in at 53.1. But not only that, we've seen some other positive numbers around the region. Taiwan's come out with its manufacturing numbers, very positive there, 54.1 in the month of March. South Korea also showing growth in their manufacturing sector with a reading of 52. A little bit disappointing for Japan. We've seen the Tankan survey today with a -4 reading when expectations were around a -1. But of course tonight it's going to be all about the ISM number coming out of the US, and growth is expected there. We're expecting to see a jump up to 53, and then the Eurozone PMI numbers, where we're not expecting to see a change from February. But tomorrow is a massive day. If we do see an interest rate cut, then that would be a positive for the Aussie market, but a negative for the Aussie dollar, and that's one of the things that we've been watching for as a catalyst to help along Aussie company earnings that fall in the Aussie dollar. So if we have a look at economists, they're expecting no change, but the markets have actually priced in a 40% chance of a rate cut tomorrow. And of course, we see retail sales numbers out for February as well, and a 0.2% gain expected there.
Julia, do you see it happening? Do you see them cutting with both, obviously, David Manshire and Jeff Wilson in the prior segment, maybe more hoping it happens and maybe realistically thinking it will happen? I mean, do you see it happening? The market obviously would love to see it happen.
The market would love it because it has been difficult, and the market's looking for a catalyst, and we have seen earnings coming under a bit of pressure from that high Australian dollar, and the latest earnings season has certainly reflected that. But it's a bit of a tug of war, because if you go back and have a look at the RBA statements, well, the RBA has indicated that it's a worsening of the Eurozone situation, global growth situation that would provoke a rate cut. And we've seen the Eurozone worries fade into the background. We've seen the China official PMI numbers coming out quite strong. So in terms of what the RBA has indicated in the past, really no change expected, and I guess that's why economists are expecting a no change. The market's looking at the difficult time that a lot of those companies with exposure to the Aussie dollar are having, and I guess a 40% chance being priced in by the market. So a bit of a divergence there between economists and the market. So tomorrow should be a pretty exciting decision at 2:30 p.m. But also that retail number, retail sales. We know that that retailing sector has had a dismal dismal time, and the last interest rate cuts that we saw here in Australia were November and December, but really no signs of flowing through to that retailing sector, which is still undergoing quite a bit of difficulty, as well as those building approval numbers, which showed the third consecutive month of falls there, despite the interest rate cuts that we saw in November and December.